Been a wild day for Chewy investors. Ahead of the open, Keith Gill, aka Roaring Kitty, disclosing he took a 6.6% stake in the company. And it comes after his tweet last week of just a dog, which drove shares higher. But we are seeing the stock well off those earlier highs, and now down just about 5.5%. Joining us now, we want to bring in David Bellinger. He is Mizuho's senior analyst. David, it's good to talk to you. So it certainly has been a wild couple of trading sessions here for Chewy. I'm curious from your perspective. Obviously, when you take a look at the trading patterns of Chewy leading up to this most recent news, it had been trading very differently than some of those other meme stock names. Is that now all about to change, or has it now changed because of the activity over the last several days?
Yeah, great. And thanks for having me on. Look, this is a very odd situation here, right? We don't think this is an optimal scenario for Chewy shares. And just taking a step back here, this is very much outside of the company's control, right? Senior management is doing a pretty good job of maintaining and managing the business going forward. But I think these developments that you've got here today, adding a lot of volatility to the stock, and from an institutional investor standpoint, I think this could create an impediment to owning shares, right? You're going to have Chewy now associated with these meme stocks. It's going to get grouped in with GameStop, AMC. We've all seen what happened to those names in the past. So I think from here on out, this excess level of volatility, this excess news flow, it's going to create a growing sensitivity to owning shares. We don't think that's a great development for Chewy.
David, I'm just curious, the meme stock sort of trade theme. I'll be honest, David, in 2021, I did not think, we'd be still talking about this in July 2024, but it seems like it's here in some form here to stay. I'm curious just how, if at all, David, it kind of just impacts and influences your job as a financial analyst.
It's a great question. I didn't think we'd be talking about this either. But for my view, we're looking at Chewy from a pure fundamental perspective. Right, and Chewy is a real company, right? You've got $11 billion of annual revenues. You've got 20 million active and loyal customers. Free cash flow is starting to turn positively for Chewy. It's starting to inflect higher. Our real concern with the stock has been that net active customer growth has stagnated. You've had 6 quarters in a row now with year-over-year active customer numbers down. That's been the big hesitation for us. Chewy operates in a great sector. We think that senior management's doing a good job. The sector overall has been challenged, though. You've got all these inflationary pressures. It's been holding back pet ownership and new adoptions, and we really think that's the key next catalyst for Chewy. But now with all this news flow that you've got here, and try to track data points across Reddit or Twitter or just somewhere else, it just adds a new layer of complexity to all this, one that we have to track. But I think from an institutional investor standpoint, it's very easy to just avoid this headache, right? You don't have to worry about this if you're not a holder, if you're not involved in some way. And I think if you're getting more and more of this news flow and more of this fever pitch picking up, that's going to make your typical institutional investor that much opposed to owning or selling the stock, and just taking more of a view of a neutral and standoffish kind of stance here.
Yeah, I'm curious if you could talk to us a little bit more, David, just about that fallout. You mentioned the potential shift that we could see in institutional investor involvement. Beyond that, how volatile could these next several trading sessions be as a result? And when you talk about the fact that it is trading now much more similar to a meme stock rather than to fundamentals, you talk about the movements that we could see on the back of earnings, things like that. How much of that is now discounted, do you think?
Yeah, it's highly, highly unpredictable. And for me to tell you what type of trading range Chewy will be in tomorrow or in the next few weeks is near impossible. But I think what you are going to start to see is the fundamentals start to be decoupled with the way in which the stock is trading, right? And some of these things like historical valuation parameters, maybe they get thrown out the window, right? It makes our job increasingly more difficult. So we are trying to look at this from a fundamental standpoint, if there's an opportunity in the stock. But in terms of day-to-day volatility, some of these squeezes higher, they screen as potentially good exit opportunities. You had a big #1 shareholder in Chewy, the private equity firm BC Partners. They're already selling their stake, right? Chewy bought $500 million worth of shares directly from them. There was a filing late last week that they used that meme strength later in in the period to sell additional shares, $155 million worth of shares according to that filing. So you may see more and more of this as the volatility plays out, but it's something to keep an eye on from the fundamental standpoint, as well as just this day-to-day volatility.
Final question, David. And here's probably one you're more comfortable answering as a financial analyst. Just what are, you're on the sidelines, David. You got a neutral. What do you need to see? I mean, take Roaring Kitty out of it. What do you need to see here before you would be comfortable telling your clients, hey, listen, this one's a buy?
Yeah, absolutely. The number one element here and the number one catalyst is growing active customers in a sustainable way. Chewy went from about 13 million active customers in 2019. You had the whole pandemic surge, the shift to online spending. That number ratcheted up really quickly to about 20 million. We've sort of been stuck here, right? And the company has had some mixed guidance on when and just how quickly those numbers just start moving higher. The last earnings call with Q1 results, definitely a better than feared print. And you did have some green shoots coming out of adoption numbers starting to pick up, relinquishment data starting to get better on the pet side. But it was pretty clear to us that we can't fully underwrite this. One quarter doesn't make a full trend here. And I think you might see numbers from at least a pet sector begin to improve slightly. But with all these cumulative effects of inflation, just that clear path to a sustained upward move in active customers, especially for a growth stock like this, that's what's being held back in our view. And that's the next catalyst and the most consequential data point we're looking at from a fundamental perspective.
David, appreciate you coming on, talking all things Chewy and Roaring Kitty. We appreciate it.
Thank you.